Candlesticks are what helps us understand the sentiments of the market, and in this video I'm going to be showing you how to read the candlesticks properly, how to use the candlestick to understand high probable trades and what you should be looking at for before you even trade with candlesticks. I'm going to be showing you also three top candlesticks that can help you identify high probable trades in the market. Now, if this kind of video sounds like what you love, please make sure you watch it from the beginning to the end so that you get all the details from the video. And also, if you love this kind of content, hit the like button, drop a comment in the comment section telling me what aspect of this video you love, and don't forget to subscribe to this channel, and most importantly, share this video with your friends so that they can also benefit from this kind of content. All right, with that said, let's dive into the video of the day, and don't forget to join the Blockchainplus community on Telegram so that you stay updated on what is happening in the crypto space. All right, so let's just dive into candlestick. First of all, let's understand candlestick. Now, what are candlestick? Like I said, they help you understand the sentiment of the market. What does it mean? Candlestick are what makes you to know if the market is being bullish or if the market is being bearish. Candlestick is what helps you to know whether to be buying the market or to be selling the market. Candlesticks are what helps you to know whether the buyers are in control of the market or sellers are in control. Now, candlestick is what makes you know the behavior of human beings in the market. If you understand all these things I've said, then reading the candlestick becomes very easy. Now, look at this particular candlestick right here. Now, with this candlestick, let me say, okay, this is on weekly. Let me just change this to daily so it becomes very easier for us to look at. All right, so great. So now we have changed to daily time frame. Now, before I begin to explain how candlestick really operate, let us first of all understand that candlestick also work with time. So every candlestick in the trade or in a chart represents a particular time frame. For instance, a candlestick can represent 1 minute, 1 minute, 5 minutes, 15 minutes, 30 minutes, 1 hour, 4 hours, 30 days, which is 1 month, and then also 1 week, and so on. So candlestick can represent each time frame, including 1 second. You get? So now when you understand that, and also 60 seconds of candlesticks make up 1 minute. So it means that in a 1 minute candlestick, let's say you have 1 minute candlestick like this. That 1 minute candlestick, when you expand it, you can see 60 candlesticks inside of it, which makes 60 seconds, right? So in 1 day candlestick, 1 day, how many hours do you have in a day? 24 hours. When you expand 1 day candlestick, when you open it up, you have 24 1 hour inside. And also when you open it up for the 4 hour, you have about you have six 4-hour candles inside 1 day candlestick. You have 6 hours candle inside 1 day candlestick. So when you now understand this, it's not easy for you to understand how to do analysis with candlestick in different time frame. So right now we are in 1 day. This 1 day candlestick we are seeing now means that this particular candlestick right here represent 1 day, and inside this one candlestick, if you open it up, you can see 24 1 hour candle, and you can also see 6 4-hour candles inside of it. Now, with that said, let's now look at what makes up the candlestick. What makes up the candlestick are the open, high, low, and close. So we have the open, we have the high, we have the low, and we have the close. So the market opens at a particular spot, it goes low. It opens at a particular spot, right? It goes low to a particular spot, it goes high, and then it goes low, and then it closes. So that is how the market works. It opens, it goes high or low, and then it closes depending on the movement. So for instance, now if the candle is bullish, if it is bullish, now let's say this one, you see this particular candle now, this one, good, it opened here because it's bullish. It means it opened at this spot, it opened there, then it went all the way to this low. You can see this low right here, then went all the way to this high, but closed right here. So it opened at the bottom and closed at the top, making it bullish. If it is bearish, it's going to open at the top, which is here. It opened at this top, it went high to this point, then it went low all the way to this point, then it closed here. So it opened at the top and closed at the bottom. So those are the two things you need to understand between bearish and bullish candlestick. A bullish candlestick opens at the bottom, closes at the top. A bearish candlestick opens at the top, closes at the bottom. So those are the things you need to understand about the candlestick. Now when you understand that about candlestick, now it now brings us to knowing how these candlesticks makes up different patterns in the market that affects the market. Now if you look at a candlestick, for instance this one, when you see a long candlestick like this particular red one that formed like this, it shows, since it's a long candlestick that went red, that went down, it shows that the market was bearish. And once you see it bearish, as the longer the candlestick, the longer the bearish candlestick, the more it indicates that the sellers are in control of the market. It indicates that buyers are not ready to buy at that point. They are waiting. It indicates that the market is going down. Now, the stronger the bullish candle, like this one, it also indicates that the market is supposed to be going up, that buyers are in control of the market. Now, when a candlestick has a very long wick like this one, you can see right here, this one, the wick is longer than the body. It indicates that the buyers wanted to take control, but the sellers said no, we are in control of this market right now. We want to sell this market and make profit for ourselves. No, so that is what it indicates. If the wick is longer in the downside, let me just look for an example right here. Let me look for an example. Good. Like for instance, now this one, you can see that the wick is longer than the body from the downside, right? Like so. It indicates that the sellers are not in control of the market. So all of these things gives indication of what is happening in the market. Now, with what I have just explained to you now, you should be able to understand the reactions of the market when you see a particular candlestick. So I'm just going to show you three most important candlesticks that you can use to understand how the market actually performs. So one of them is your engulfing candles. So we have different types of candlestick. Let me just show you an example with an image right now. So if you look at this image right here, you can see that we have 1 2 3 4 5 6 7 8 9 10 11 12 13. We have 12 different patterns right here. However, we have more than that in the market, but the idea is not for you to learn or to master or know, because you're going to confuse yourself. All you just need is maximum 3 different patterns that you can master. Once you master those ones, you know that anytime you see them happening at key levels, you know what the market is doing at that level. Now, one of them I'm going to tell you to always focus on is the engulfing candle. So these are the engulfing candles. We have bearish and bullish engulfing candle, these two. Now, for the bullish, when the green one is bigger than the red one, just like it is here, it means the market is bullish and the market is going to buy. The same thing also happens vice versa. When the red one is bigger than the green one, the market is going to sell. Now, before you take decisions with this kind of conditions, you need to make sure that these are happening in key support or resistance levels. Now, another candle I will show you, we are going to look at all of this in the market. Another one I'm going to show you is the morning and evening star. So these two right here. So the morning star represents market reversal. The market wants to start buying, and the evening star to represent market reversal. The market wants to start selling. So these two candles right here, how do you identify them? One is always a red. If it is morning star, you will see 2 red, or 1 red, 1 small green, and 1 big green, or 2 red, 1 big red, 1 small red, and 1 big green. You understand? So for instance, now this small one here can be red or green. It doesn't really matter, but the pattern has to be like this. Same thing also, this one can be green or red. It doesn't matter, but the pattern has to be like this. It has to have this indecision candle in the middle. The one in the middle is an indecision candle, or you call it a dodgy candle, just like this one. You can see it right here. You can call it a dodgy candle. A dodgy candle always represents indecision in the market. So you're either using the engulfing candle, the morning or evening star. Those are the two that you can use for market high probable trades in the market. Another one that you can use is the hammer. The hammer is the third one I will introduce to you. So this is the hammer. You can see this hammer. This is, you can call this one inverted hammer or bearish hammer. So those are the three I can introduce to you that you need to pay attention to. These three right here, you can pay attention to them because they will help you in your trading journey very, very well. So let's go to the market so that you will now begin to understand how they work in the market. So if you come back to the market right now, the first one we are going to look at is the engulfing. Good, you can see engulfing right here. You can see a bearish engulfing candle right here. You can see a bearish engulfing candle right there. So the red one clearly engulfed the green one. Now, when you see this kind of thing happening in the market, of course, you know that your trade is going to be just 50% of that engulfing candle, not the engulfed one, the engulfing candle. Your trade execution is going to be around 50% of that particular candle, and your stop loss is going to be at the top. But then you must make sure that you're taking the trade around key levels. Let it be that you're seeing this thing happening at key support or resistance levels. So this is a bearish engulfing candle, and you can see how the market went down. From here, the market came down to this point before it started going back up like so. You can see how the market went back up. So now let's see why the market also went back up. Now if you look at this place, there is no pattern right here for me to trade, so I'm going to use another thing to trade that as anyway, but there is no pattern right there. Now if you look at this place again, you can see a bullish engulfing candle right here. Let me just use this. You can see a bullish engulfing candle right there. You can see that is a bullish engulfing candle, and you can see where your trade entry came all the way to this is around 7886 of your Fibonacci retracement, or even more than 886 of Fibonacci retracement. Now you can also see there's another bullish engulfing right here. When the market came to that 886, there's another bullish engulfing right there for you to see. Now if you look at this one, you can't call this one bearish engulfing. You can't call that bearish engulfing. So even if you say it's a bearish engulfing, but look at where it is happening right now. It is happening around these trend line levels going up. You understand? And we have seen a lot of bullish engulfing in that region. This is one, this is two right here, this is three. You can see. Then after this one, you can see another one right here. This is another bullish engulfing candle. This is another bullish engulfing candle right there. So the bulls are basically in control of that place. Now if you look at this place, this is the morning star, this is evening star I talked about. You can see two green, one is smaller than the first one. This one is bigger than this one. Then there is a red right there. So when you see this kind of pattern happening right here, you know that there is a sell-off coming. And where is it happening? If you look at this place, is the resistance level that I drew some days back. If I go back all the way to the down, you can see that place. You can see the level right there. So that is where the thing happened, and you can see how the market dropped all the way from this place to this place. This is a daily candle, so you know how much drop this is, all the way from, let's see, the market dropped from 240, let's just say 240 to 191. So that is a heavy drop in the market, right? Like so. So you've seen the engulfing candle, you've seen the bearish engulfing, you've seen the bullish engulfing, you have also seen the evening star. So let's check for morning star and this thing hammer, if you can see good one. So this is an engulfing candle, bullish engulfing candle, but let's see if that engulfing candle actually played out. Okay, so it never played out. Now why did it not play out? So of course, if you look at that place, that is not a strong support level. This is not a strong support level. So If you notice, that is why it didn't play out. So the market came down. The market actually came down from that place. So let's check for another one. Okay, so this is another evening star right here. You can see it right there. That is an evening star, and you can see how the market dropped all the way to this point, and that is where we are right now. So let's see if you can see a hammer. So far, I'm not seeing a hammer, but I've shown you evening star. I've shown you bullish and bearish engulfing. So I'm just looking for one hammer so that we can see. Okay, so this is a doji. So this is a doji, and this doji happened around a clear support level, and you can see the move of that particular doji. So guys, I don't want to make this video too long because it's okay. So this is a hammer. Yeah, so this is a hammer right here. That's what I was looking for. I wanted to just see one hammer in the market. So this is a hammer right here, and you can see how the market reacted in that particular level. After the hammer, you can see clearly the breakout of the market to this level. So these are high probable candlestick patterns that you can use to identify the market. Now, why are hammers even good in the market, or why do people trade it and make so much money from it? Now, if you look at this hammer, you can see it happen clearly at a place where we can see it is having a double bottom in the market. So that is a double bottom in the market, and you can see how far it moves. So why do these patterns actually make sense? Like I've explained to you from the beginning, it shows the reactions and sentiment of buyers and sellers in the market. This hammer that you are seeing right here clearly shows that the sellers are not willing to continue to sell. So once the sellers are not willing to continue to sell, what happens? It means that the buyers wants to come in and take control of the market, and the market is going to go up. That is what it means. Now, if you look at this one right here, this particular candle, let me just draw it with this, like so. If you look at that candle right there, this is actually what we call liquidity sweep. That is what we call a liquidity sweep candle. You get? Now, this kind of candle, some people can still call it hammer with this is a hammer with a very long wick. You understand? Now, once you see this kind of hammer happen, you simply know that people were wiped out around this level. And then the market still closed inside this zone. You can see the market never closed outside this zone. So once you see this kind of thing happen, you should know that these buyers are not willing to continue to buy above this level. So the sellers are definitely going to come in to sell the market. So let's see what happened. You can see what happened. The market continued to sell and continued to sell all the way to the bottom side. So this is what you need to take away from this video. First of all, candlestick patterns helps you to understand the sentiment of the market and traders' behavior. Secondly, for you to trade candlesticks, it must happen in key levels, key resistance, key support, or key trend levels. Those are the things you need to take home from this section today. So guys, I believe that this section has helped you to understand the candlestick and what you need to do with the candlestick going forward. Alright guys, that is it for me in today's video. I will see you guys in another video. Remain blessed.